Here's a question for you. Given the massive stock market sell-off in March and the equally massive stock market rebound, can you guess the S&P 500 return year to date and over the last year? Well, here with the answers, our chief equity strategist and economist, John Blank. John, considering that the S&P has been struggling this month so far, what is the answer?
Terry, I got it right in front of me. So over the last month, the S&P 500 has given back 7.2%. So we're not even at the 10% correction, Terry, as we speak on September the 24th, which is a Thursday. Year to date, the S&P 500 is almost completely flat, 0.2% gain. So the basic truth is this market has produced no gain top line at this point in time this year. However, if you look over the last 12 months, you get 8.7% annualized return. That typically is completely average, Terry, for any given year. One of the things that's fascinating about this market over the last 90 years, 9.8% is the average annual return. So after this incredible volatility introduced by the COVID crisis and the shutdowns and the reopenings, this market, factor that out, look over it, it's average.
Okay, so S&P 500 behaving average. Is there anything for investors to be concerned about going into year's end?
Other than they should really tamp down their expectations on the amount of rebound from here. I mean, the market little overshot to 3,500, which was typical of the megaphone pattern of bigger lows and higher highs. And now it's just struggling around that long-term trend. And it could be entirely true that everybody's surprised that the election doesn't play much of a role. I mean, it might be a lot of day trader volatility around the election date. But by the end of December, this market might be at 3,400 on the S&P 500, and you might be looking at 5 or 10% return this year.
Well, fears about the worsening coronavirus as well as uncertainty on further fiscal stimulus did rattle the stock market and led to a global sell-off earlier this week. Are those going to be the two main factors impacting the market going into the year's end?
Yeah, Terry, I think you got one right, which is the struggle to get additional stimulus done. We've got, I think, a Tea Party person running the White House now, Mark Meadows, and he clearly is acting like a Tea Party guy and not helping with negotiations between the Treasury and the House. So yes, the answer is, I think it's clear that and Goldman cut their outlooks on GDP growth for fourth quarter, that indeed this group will probably keep away from more stimulus, or at least make it so stingy that it doesn't matter too much.
Let's not forget also the tech stocks have flagged recently. Is that concerning?
Not really. I took the tech stocks as driven by momentum, and those traders were going to take profits at some point. So I personally thought it was more of a technical top than anything. And we're seeing a 62% retracement, for example, in the S&P 500. This might be classic Fibonacci stuff, and the thing's going to bounce off a 200-day moving average or something like it, and we're going to keep climbing. So it was an overbought momentum trade. Profits were taken. Now we're moving on different longer-term fundamentals.
All that said, overall, analysts appear less gloomy about what remains of 2020 and more confident of a 2021 profits bounce back globally. Are you in that camp?
Yeah, I think so. I think you've got a better set of circumstances internationally. And the way I usually decide that my statement I just made has some credence is I look at the dollar. And when dollar weakness is happening, money is going out of the United States into foreign markets. And non-dollar denominated equities are also getting a bid through that channel. We're seeing that right now. The US dollar, broad dollar indexes are down 7 or 8% over the last 2 months. That's telling you something very important, which is there is a steady and very noticeable bid on international shares this year.
How are you feeling about the upcoming Q3 earnings season?
I think it's going to be overlooked by the election. So I think it's going to be very hard to be able to see any trading activity coming from it. But I do think it'll be somewhat better than people think, but not so much that people actually start bidding more for stocks. I think it'll just be a non event in the face of the U.S. election.
Is one bright spot the fact that IPOs are back in the picture?
No, actually, I think IPOs coming back in the picture is speaking to this warehousing of activity during the COVID crisis that's now finding its way back in. So I don't know it's anything more than that. The people who were in banking or thinking about IPOs just decided to put it off for 6 months, and they're now getting back to it.
All right, here are a few Zach's number one ranked stocks that you're monitoring. Lam Research, Aspen Technology, and Lennar.
Right. Lam Research, chip fabricator, fabulous name. Big pullback here. You can get into this name now on a trading basis, make 10 or 20%. Aspen Technology, really strong dental technology stock. And again, healthcare is overlooked. There's a little issue here with the election on this, but it's dental, not medical. And I think you can make a good play on this stock. If you get the bounce, right, that's a stock that'll make another 10 or 20%. And then you've got Lennar. Lennar is a home builder. And home building is one of the strong spots of this COVID pandemic because people are buying homes or getting into bigger homes because they're in them more, working remotely with their children not in school, and working out in their homes more because they don't want to go to the gym. So Lennar has become a very strong stock, and I expect that is another place the bulls will focus on in the next quarter or so.
Our chief equity strategist and economist, John Blank. With John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.